Okay, welcome everybody. This is our third part of the Monetary Policy Research Divisions program, which is the topical debate. So for this session, our analysts have prepared answers, opinion pieces to very interesting research questions on different matters from monetary policy in emerging economies to the future of the economy after the pandemic. So today we're gonna have a brief discussion about these questions to present the opinion pieces that they have addressed and try to make a few polls to see what our thoughts are on these matters. So our first question, give me 1 second. So our first question is going to be your thoughts on the future of the economy. So the first question is, how hopeful are you regarding the future of the economy? How you think indicators, including GDP, inflation, and wage growth, unemployment, productivity, etc., will move in the medium term of the next 5 years? So I will first invite to speak Karen. You can mute yourself and explain briefly what is your answer to this question.
Okay, thanks very much, Roberto. And sorry guys if there's a bit of background noise. I could only come into college where there was good enough internet. So basically, I'd be fairly up. I have sort of a mixed view of the prospects of the future economy over the time frame of the next 10 years. My two main predictions would be I predict higher inflation and output over the next 5 years due to changes in central bank optimization preferences. And I'd also predict lower productivity as the world economy transitions from globalization to regionalization. So the first point of this is the inflation and output point. So first, I predict that policymakers will be slightly less hawkish regarding inflation than in recent years. Prior to the pandemic, populist leaders such as Trump and Johnson ran large budget deficits amid high output and low unemployment. Despite this, we didn't see any significant rise in inflation until the onset of the pandemic. This was followed by even greater deficits in even more countries during the pandemic. And although there has been a rise of inflation, it's unclear whether the deficits are the cause of this inflation or whether they're simply a temporary shock coming about as a result of supply chain shortages during the pandemic. Hence, some policymakers may conclude that they and their predecessors, and we're seeing a bit of this at the ECB and other central banks at the moment, were too hawkish about the amount of slack in the economy prior to 2016, hampering growth unnecessarily. So eager to avoid the problems associated with this, they may conduct more dovish policies and all macroeconomic effects that entail. Sorry, I might just. Sorry, let me know if you can't hear me if there's some noise in the background. So secondly, the pandemic will accelerate a trend towards public and private actors investing in their own regions as opposed to exploiting truly global supply chains. This reflects a shift in the preferences of economic actors from pure efficiency to a combination of efficiency, resilience, and nationalist pressure. This trend was already well underway prior to the pandemic, but will accelerate due to the perceived risk of being unable to access essential supplies in emergencies such as vaccines during the pandemic, as efficiency is sacrificed for security reasons. However, this will result in lower productivity and hence lower real wage growth for the average worker. Whether this trend continues in the long run depends on one, whether consumers and voters in major economies are willing to stomach the lower real wage growth that this policy entails in return for more security/stability. Sorry guys, it's really. And the political fortunes of liberal nationalist politicians in major economies. And finally, this will also, how strong this trend is also depends on the diplomatic and power relationships between the major powers. And that's pretty much it.
Thank you very much, Karen. Do we have any comments on how do you think the economy is going to behave in the next 5 years? Do you expect high inflation, low inflation? Do you think we're going to go back to normal? You can, if you want to talk, you can unmute yourself, or if you find it more easy, you can just raise your hand. No? If there are no comments, I mean, I'll move on to reading Annie's answer to this question, which is an alternative way of, sorry, Sana's answer to this question, which is an alternative response. Let me read it out loud. So, wait, give me a second. Oh, no, sorry. Well, I made a mistake. No, since we have heard Karen's point, now I call Shahan to put forward his response to this question.
Yeah, so my response is a bit more UK focused. So I believe that inflation will increase further in the medium term, nearing 6%, primarily due to significant ongoing uncertainty in the labor market and also in gas prices. And since the Bank of England has committed to slowly increasing the bank rate to 1% through 2024, and energy prices will likely stop rising, I think that the inflation rate will be trending comfortably below the mandated 2% rate within the next 3 years. Beyond 2025, I think that UK supply will no longer be curtailed by COVID supply chain disruptions. And I think that this will allow for any remaining supply bottlenecks to be broken, and there will be no longer a large excess of global demand. I think that this, combined with tighter monetary policy, will lead to a sharp decrease in the growth rate each year from the 2021 level, stabilizing around 2025 to the growth rates prior to the pandemic. And I think that in the long run, recruitment difficulties and job vacancies will decrease as supply chains recover due to more certainty. And this will lead to a decrease in the unemployment rate to near 4% levels by 2026 as supply meets demand for labor.
Thank you, Shahan. I had a question regarding that, because you made your question in a UK setting, and I was a bit curious when the government announced that they had to increase the taxes at the beginning of the year. I believe it's under the system of pensions. You have to increase the number of contributions in order to pay for increasing costs of the NHS, but also because of the pandemic expenditures that were made, including furlough. So, do you think the government having an increased level of debt, and which ultimately will have to pay through taxes, probably, do you think that's going to have an effect on long-term growth or inflation?
Yeah, I think an increase in government debt, if they navigate that through more taxation, I think that will definitely have an impact on inflation. I think that may decrease inflation further in the medium term. But I think in terms of the getting back to the 2% in the kind of 4 to 5 year range, I don't think that would have too much of an effect, in my opinion.
Fair enough. Do you have anything to say, Karen?
Yeah, I actually would just be interested to hear, maybe, I think he's definitely right about the recruitment trend. I think we will see a little pressure on that. I just wondered if whether Sean expects wages to keep up inflation. Like, how does he see workers' real take-home wage evolve over the next 5 years?
I'm sorry, just the last part of your question. Could you just repeat that? Sorry.
Yeah, sorry. I just wonder how you see workers' real take-home pay kind of evolving over the next 5 years.
Yeah, sure. So I think since right now there is a type of sort of excess demand for labor, I think that potentially real take-home pay combined with the taxation will see a sharper decrease than expected. But in terms of I wouldn't know how that would translate into the really long term. I don't know if Roberto or if anyone else has any comments on that. I'm not too sure.
I mean, there have been a bit of concerns on productivity and stalling in growth. We could, in principle, curtail real wages, and not to the point of declining them, but at least to reduce the growth of real wages. That could be a concern in the long term. Although some people have said that the pandemic could actually revitalize growth in the long term, but this is very early to tell. So I'll put the poll now. This is the first poll I've done, I think, in Zoom. So let's see how it goes. So you should be able to have it now. I think I launched all questions. If this is the case, you just answer the first one and then I'll send again for each of the questions. So yeah, just question one, which is the one we were covering. How hopeful are you regarding the future of the economy? Okay, if you have troubles, like it doesn't allow you to send it, just check a random answer for the rest. I thought they would only show the first question, but I guess not. So just click any answer. Okay, we have first response. We have very optimistic on one hand. We have slightly pessimistic on another hand. Slightly optimistic, so it's pretty balanced. And slightly pessimistic. There's one response left, but actually I shouldn't be saying the responses out loud. I'll change it for the next one. Okay, so I have 20%, well, I have one person saying very optimistic, 2 people saying slightly optimistic, and 2 people saying slightly pessimistic. If you asked me, I would be probably in this slightly optimistic side. So I think it is pretty much a trend. It is very unlikely that effects of the pandemic will stay for very long, especially after we've seen a very good sharp recovery in the recent months, and of course there's inflation, but in principle inflation shouldn't be a long-term problem based on historical data. But on the other hand, I think, yeah, there's the obvious supply chain disruption. So I think it makes sense to not be completely overly optimistic, especially after very large government deficits and the implications that might have in the future. So fair enough. I'll end the poll here. I can share results. I didn't know they could share results, but well, you haven't. I didn't know this was possible, but fair enough. Okay, so the next question, let me read it out loud. 1 second. The next question is, what are some macro trends you see emerging from COVID-19 regarding sectors, industries, products and services, how the economy operates, how lifestyle changes? Although this is obviously a macro question, I think it is, the way it's phrased is also aiming at industrial specific characteristics, like how preferences will change, how industries might change, which is not really macro but micro. But let's pretend for a second we're talking about macro because this is monetary policy. So I think this question was answered by Pedro. So if he could come forward and give his opinion, would be great.
Sure, thank you. So I think big events accelerate but do not cause developments. So as mentioned before, we've seen the rise of populism and this anti-globalism with Brexit and China trade war in the past decade start a trend towards shortening supply chains in Western economies. And I think the pandemic has accelerated this. So of course, there's been higher inflation because of it, which is compounded by looser monetary policy, a trend again prevalent before the pandemic, but accelerated since. So even though I think inflation is rising and we're going to see higher interest rates, I think real interest rates are going to remain negative for the shorter, medium term. Now this will accelerate the trend towards digital currencies. And to be fair, that could be seen as as something to counter high inflation. Other deflationary forces from technological developments could be DNA sequencing, as it lowers health costs, robotics, lowering manufacturing costs, energy storage, lowering energy costs, and AI, increasing productivity and efficiency. Thank you.
So thank you, Pedro. I think that's really interesting. I was waiting for the first person to mention cryptocurrencies. I think that was eventually coming. So what do we think of this? Do you think the world is going to become more global or less global after the pandemic? Especially, I mean, this is very close to being speculation, but with the tensions being high between Europe and potentially Russia, and very difficult attempts, diplomatic attempts, does this affect in any way how trade is going to be post-pandemic, or it doesn't? Any thoughts? I haven't heard anything from you, Tim. In the meantime, I'll read Sana's response, who couldn't come, unfortunately. And he says, following the COVID-19 pandemic, I think industries will shorten their supply chains to increase resilience. The pandemic has exposed the vulnerability of global supply chains. For example, COVID-related closures of factories in some Asian economies disrupted production across several industries, including motor vehicle manufacturing and computer electronics. Additionally, COVID-19 has accelerated technology adoption across the industries and in people's personal life. The rise in e-commerce, remote working, online working, and telemedicine that occurred during the pandemic is likely to be continued going forward, as there are convenience and efficiency advantages associated with them. Consumer behavior has also changed, as the declining trend in the money spent at home before the pandemic was reversed, leading to the home nesting. That is, the spending on home gyms, for example. I think it is likely that this behavior will partially stick for high-income households, as the convenience for working from home might mean their preferences have changed. Even for lower-income households, the investment into home nesting equipment means that they are likely to continue to use them after the pandemic. COVID-19 will also affect the way the economy operates, as it has exposed the deficiencies in our current system. The pandemic saw a shift from state capitalism towards state socialism, which is a centralized response prioritizing the protection of life. And this sounds that in the future operations of the economy are more humane and resilient to future pandemics or crises like climate change. I want to hear your thoughts. I have a few, but I want to hear your thoughts first. Do you have something to say, Per, compared to your response?
Yeah, I think there's a few interesting things there. So first of all, the trend towards state socialism, I think is obviously partially true, but I think you also have to look at the fact that venture capital funding, which is very much a capitalist thing, has boomed in the past few years, primarily due to lower interest rates. So, and I don't think that's going anywhere. So I don't know if we're going to go more towards socialism. On climate change, that's very interesting. But I think, especially with high inflation, as people feel the hit of the green transition, I think there's going to be less popular demand for a greener economy. So those are my thoughts.
I was discussing I was discussing this the other day with my friends, that I find it quite interesting how in Europe during the last 2 or 3 years there's been a shift to the center left in some countries, like in Germany the CDU lost power, in France Macron, I mean, he might not be center left, but at least center. He's been identified as the main leader as opposed to the right. Was increasing. In England, Labour is starting to win in the polls. So it tells you about a shift. I wouldn't go as fast to say there's a shift towards state socialism, but I think there is an interesting shift, and that's common. In fact, that happened a lot after the global financial crisis. That normally people tend to switch to left-leaning governments. I mean, I'm saying strict socialism, but perhaps to more left-leaning governments during financial crisis, which is a really interesting thing to say. Any comments? Any further comments?
So on that, so you mentioned after the GFC that there's a trend left, but then by 2010, the Conservatives were voted in to implement austerity. I think there's also, especially in the United States, a bigger presence for, a bigger call for cutting national debt and implementing austerity in a smaller state from a fringe group in the Republicans. So I don't think that's necessarily going to happen. The trend left.
That's fair. That's fair. Yeah, I mean, there's a lot of literature on the effect of economics in political affairs. It's part of political economy. I'm not an expert by any means, but it's really, really interesting in case you're curious about that field. I'll put the poll. Can I? Yeah, I can. Let me see if I can just put one question so you don't have to go through all the can I just, no, I don't think I can. Okay, so let me just put the next poll, relaunch. There you go. The second question is, do you expect to see changes in the macro trends emerging from COVID-19 regarding sectors, industries? It's a very broad question, but I want to see what are your thoughts. This question was a bit more open than the previous one, so I expect to be more. I expect to find more consensus before. So 4 responses, 1 missing. Fair enough. So I got 80% surely and 1%, sorry, and 20% possibly. I would add myself in the surely. I think the effect of COVID is probably a generational change in the way we organize cities, in the way we use technology, and I think many of the changes will be here to stay. Changes in resilience of supply chains, I think. It's not sure, but like none of us can be certain, but I think I would incline for that way. So there is a significant majority who is saying sure. Okay, Now, let's go to the next question. Give me a second to change the slide. You know, I don't think I ever had so many slides open at the same time, but I'm doing my best, I promise. So you should see my, no, what happened? Okay, so the next question is, we pause this here, should be your thoughts on the state of the future monetary policy. The question is, what do you think is the future post-COVID state of central banking? So now we're not talking about the overall economy, we're talking about central banking and how central banks conduct monetary policy. What will monetary policy mean? To what extent do you think current traditional or unconventional monetary policies will be effective in the future? That's a very big question. I think that was written by Jason in the first place, because it's not just about whether they will use it or not, it's also about whether they will be effective in the future. So I think this question was here. This question was answered by Junjie, who is not here. But I could read her. I mean, I haven't received her permission to saying it out loud, but I think it will eventually be published, so I won't say it or not. So I'll basically just put the poll to see what your thoughts are, and then we can have a brief discussion based on the. So let me close this. There you go. So the question is very simple, is will central banks move further towards unconventional monetary policy, yes or no? I mean, obviously considering the counterfactual of central banks will stay with traditional monetary policy. For the record, QE under this context should be still conventional monetary policy. I think at this point we can finally say that that's a bit conventional. Sorry if that affected any answers. By unconventional, I think I probably mean negative interest rates, some modern monetary theory or something of this kind, which is truly conventional. So I got 5 responses, and we have almost a draw. We actually have a draw, because I will vote for yes in this one. So I have 3 yeses and 3 nos in this case. So I want to hear your thoughts. What policy exactly do you think central banks will move towards? What do you think they will move towards? Negative interest rates, MMT, or you just meant QE and you want to make clear that they'll keep using QE more extensively? Any comments?
I think the most unconventional tool which could come into place, but I don't think it will, is by creating a digital currency. A central bank could lower how much deposit you have by a certain amount quite easily every year. But I think that's likely to happen, especially from the Bank of England. I think especially Andrew Bailey is quite against creating a digital currency in the first place, let alone use it as a tool. But in terms of other monetary policy, I think because we're seeing higher inflation, that creates room for higher interest rates, which will then be able to be used as stimulating power in future recessions.
Of course. Karen has something to say?
I would actually agree with Herder in his focus on digital currencies. I think the fact that, and I think I do agree with him in this case, the Bank of England, I would maybe be a little more optimistic about some currencies, by digital currencies being adopted more in the Eurozone and in China, simply because they've a lot of research has gone to developing these, so it's hard to imagine that they would go to Ultram to develop these instruments and then not use them. As well as the fact it just makes a lot more sense to be able to transfer this kind of money into people's account, because if you can selectively pursue monetary policy directly in people's bank accounts, with people with working class people who have very high MPCs, then that would make monetary policy, including incredibly effective without running into the kind of liquidity traps that recent monetary policy have seen, as well as the inequality critiques against quantitative easing and some other unconventional monetary policies. So I think there's a lot of scope for that. But I think there would be some legal problems to overcome first, particularly in the Eurozone. There's some question marks been raised about that. So I think we'll have to wait and see, but I'd be cautiously optimistic that, yeah, we're going to see a move towards unconventional monetary policies and new kinds.
Fair enough. Any other comments, final comments?
May I speak?
Sure.
I'm sorry, I'm a high school student, but I'm just really interested in central banking. So I decided to join today's debate. So I'm not sure if it's the answer that you guys are looking for, but I think the manipulation of expectations of the tools will especially become even more important. So it was always important, but I think even more so. And in order to increase the time consistency of these tools, because we have been quite slow in terms of how we react into the financial markets and people's expectations. So I think in order to reduce the sudden changes in the financial markets and to, I guess, make our policy and to make our policy tools more adaptive to these crises, I think we need to focus on the manipulation of expectations in the coming future. So I think that will be moving towards conventional policy tools that we have a better handle of than unconventional tools.
I mean, foreign guidance, I think, goes to the list of unconventional monetary policies still. It was very unusual to see Mario Draghi a few years ago saying we'll do whatever it takes to save the euro. And it definitely has an effect on expectations because we assume that banks have some credibility. And if we believe that banks can actually, central banks, whenever I say banks, I mean central banks, whenever we think banks have an actual capacity of playing with people's expectations, yes, that could be a source of potentially monetary policy. I still, there's a lot of reason, not just on inflation expectation, but on inflation anchoring. I don't know if you know Professor Reis. He's giving a talk today, as far as I understand, which you should definitely go to at the end of the day. But he has done a lot of research on what affects inflation anchors. And so I think that is also somewhere central banks we have to look to, like whether their promises of inflation in the long term will stay as constant they've been over the last 30 years, or that would change, and how does that affect foreign guidance as a potential unconventional monetary policy tool. Is there any other comment? If not, I think Tim could move to the next question, which I can read out loud. The question is, how, this one? Yes. How hopeful are you regarding the future state of monetary policy, specifically its importance value to the economic system and agents? Do we expect high inflation to diminish trust in how we conduct monetary policy? Oh, let's wait and hear what Tim has to say.
Thanks, Roberto. So I'll just read out like the summary that I wrote, but I'll apologize in advance because it is a bit long. So as you all know, the United Kingdom is facing some of the highest rates of inflation it has seen in 30 years. This has prompted speculation among some of a return to the 1970s as monetary authorities lose credibility, inflation expectations become unanchored, and wage price spirals follow. On top of this, economic support packages passed in response to the COVID-19 pandemic have caused public sector debt to rise to the highest level in half a century. This has raised concerns about fiscal dominance, a situation in which the fiscal authorities' desire for low interest rates trumps an independent central bank's target for price stability. Whilst quantitative easing has mitigated this problem by replacing expensive, long-dated gilts with far cheaper central bank reserves, it has also made public finances more exposed to short-term interest rate hikes. For example, while in December 2020, the UK government paid £2.7 billion to service its debt, in December 2021, this figure had risen to a record £8.1 billion. Despite these challenges, I remain cautiously optimistic. Central banks have overcome far greater challenges in the past, and these experiences have equipped us with a better understanding of how to deal with the present. While inflation expectations for the year ahead have risen considerably above target, at about 4.8% as of the last YouGov Citigroup poll, these are in fact less than the 7% that the Bank of England is itself forecasting for spring 2022. Just as inflation did not spiral out of control when CPI rose by nearly 6% in 2011, I do not expect wage price spirals to happen today. If anything, inflation can be expected to return to normal as supply chain problems fade out and economic agents tighten their belts in response to higher interest payments and energy costs. This last point is partly why I believe fiscal dominance is not likely to happen in the UK. Although rising interest payments will inevitably be a challenge for the Treasury, this in itself will have a deflationary effect on the economy. What's more, given that between a quarter and a third of the UK government's outstanding debt is index-linked, the gains from a situation would be too small to justify the costs. It is for these reasons that I cannot imagine these kinds of situations happening anytime soon. So to summarize, while rising inflation does present challenges, I'm confident that the central bank will be able to overcome them.
That's interesting. That's a very optimistic look. I agree. I think in other times, if we have seen like an inflation of 7%, that would have caused uproar in the market. So the fact that means that there is some anchoring still there, and the central banks still have credibility. The question is, will that stay for long? What do we think? Do you think central banks will still be the great regulators of the economy, or do you think we'll shift for example, fiscal dominance? Or
well, I'll just give my view on that. I'd say that the reasons why we have like the central bank deciding monetary policy today, as opposed to like some alternative system whereby like the Treasury decides the price level. The reasons we have that are still with, like, for example, like some time inconsistency problem with like politicians, like who just have like a 4-year, 5-year election and just are more focused on that than attaining like the price level. Those reasons are still here today, and they're not going away anytime soon. So yeah, I don't see any reason why the central bank would not like be like the person deciding monetary policy.
Doesn't it worry you a bit, for example, with the Bank of England, or especially the ECB, not in an hyperinflationary scenario, or not high inflation levels, not hyperinflationary, but on what we were experiencing before the pandemic? Central banks had interest rate at 1%, 0.05%. The European Central Bank had negative interest rates. I don't know if this still has it, but my point is, it's very, there are risks of having such levels of interest rates, because there is, at some point, there is the theory says that there will be a lower bound, because of course, if the bank charges you 10% for holding money in the bank, then you wouldn't hold it in the bank in the first place. So there are a few limits of how much we can conduct to monetary policy. So I think there are legitimate concerns of how long-term monetary policy can be, or at least under the current framework, how we can keep it as an effective policy. There were already concerns in the European Union, in the European Central Bank, because they were claiming to have a 2% or 2.5% inflation rate, but they were consistently, they couldn't reach it, because they couldn't keep lowering interest rates to achieve that target. So do you think that should be a concern in the future, like after the pandemic has passed, or we shouldn't really worry?
Well, yeah, it definitely is a concern, but I mean, it's quite a vague question because like monetary policy is always changing. So as long as it can change and respond to problems that arise, like I can just say that I'm optimistic that'll happen. But yeah, I feel like central bank digital currencies might be like one of the ways they've tried to get out of like the zero lower bound issue, as opposed to just trying to lower rates like more and more and more and getting nowhere.
Yeah, that makes sense. Sarah?
Oh yeah, one thought that I had was that a very weird phenomenon, but so basically for the past decade, the ECB, BOE, Japan, and like the Fed had done so much QE, but then there was no inflation for like the 10 years, right? And then we now suddenly have the fiscal stimulus for the pandemic, and now we have inflation. So one question that I wanted to ask was like, can inflation be a fiscal phenomenon? So maybe like the fiscal theory of the price level, can we consider these? And the second question was like the reason why Fed refuses to go below zero, because like the ECB and Japan also went lower below zero, but then the Fed never went below zero. So I was wondering about these two questions. I wanted to ask you guys.
Are there any responses? Kieran?
Yeah, first I'd say that's a really good question, Sarah, to the extent that I think there's like that's kind of what every central bank in the world is trying to figure out now. And the honest answer probably is we don't know at this stage. But a few guesses could possibly be that a lot more of the current inflation that we're seeing is due to current price shortages than previous inflation before. So it really is a case of cost push inflation as opposed to demand pull. So the kind of the budget deficits and low interest rates we saw in the 2010s mightn't have caused inflation then, which is why we didn't see it. Whereas we didn't see any particular price shortages in the area. In fact, there was falling prices for commodities such as oil and that kind of thing. Whereas now we're seeing much more supply restrictions and not that same extent. And then it's also a question of scale. Like countries are simply running deficits now that aren't comparable to what they ran in 2010, even the very start of the financial crisis, when countries initially tried a more Keynesian discretionary monetary policy. So I'd say those would be the two kind of speculative answers I'd give, but really we don't know, and more research needs to be done.
Yeah, I think it also has to do, like, for example, why the US has been more skeptical of using negative interest rates. I think it has to do with the fact that Europe and Japan, because of drops in productivity, have probably needed it more than the US. I think the US has not been in the position yet of having to push negative rates. I would talk more about the UK, who's being actually closer. I think I mentioned it in one of our previous presentations that the UK was actually telling banks to be ready, or at least considering the possibility of going negative rates. But certainly, I think it's a point that will eventually come when the US, especially, I think it's something that happened in Europe and in Japan, when you have the aging of the population. I think you could experience a decline in productivity, which could translate into a decline in growth, and it might be possible that you need to either rescale the actual desired level of inflation and growth, or you have to apply some unconventional monetary policy like going negative. But I think it's a very, very interesting question. Okay, so I'll put the poll for this. Let me launch the poll. So this is question 4. How hopeful are you regarding this future state of monetary policy? It's interesting that some people are actually choosing the first option in each question, and some people are choosing randomly. You can see some variation in the previous questions, which I was not expecting. Well, so the results are, I think, 100%, and I would agree, I would put myself in that part of being slightly optimistic. So it's good to know that at least LSE students are slightly optimistic about central banking effectiveness. Otherwise, I think you wouldn't be. We have some confidence that central banks might, in the future, have some effect in the economy and could be important players in stabilizing the country's economy. Okay, so I'll move to question 5, which you should be looking in the screen if I'm not wrong. Please correct me if I'm wrong. Which is your thoughts on monetary policy in emerging economies, which is something that is very, it's not talked about a lot. I think it's quite important because although everyone looks at the US and the UK and the ECB and how they conduct monetary policy, it can have a lot of spillover effects in emerging economies. And also emerging economies on their own have different approaches to monetary policy, for example, considering exchange rates, which is something that the US and Europe does not tackle quite strictly, but probably countries that depend on the exchange rate for most of the exporting countries or very heavily importing countries would really need to care about their exchange rates. Can you see the screen on your? I could try again. Do you have the questions on emerging economies? No. Let me try again. Can you see it now?
Yep.
Wonderful. Can you still see it? Yep. Good. Okay, so the first question is, how do you expect monetary policy to be in emerging economies in a post-COVID world? Will they embrace QE and relatively unconventional monetary policy, or will they stick to traditional methods? What does this mean for inequality and development? So the person who tackled this question was Annie, and she wrote the following. Emerging economies have deployed unconventional monetary policy during the pandemic, as shown in figure 1, which I can show you at the moment, but believe me, she has a picture of an increase in APP as a purchase. The number of emerging economies adopting asset purchase programs increased significantly during the pandemic. However, unconventional monetary policy tools, such as negative interest rates and quantitative easing, have been adopted less due to there being still room to cut policy rates. Previously, policymakers feared that easing monetary policy by cutting rates and undertaking asset purchase programs extensive in emerging economies will lead to capital outflow and currency depreciation, which would have negative impact on trade. However, recent monetary policy easing has shown to be quite successful in controlling inflation due to reasons including better central bank credibility and structural reforms. Furthermore, interest rates in advanced economies are likely to remain at low levels due to the need of monetary policy to remain expansionary to sustain economic recovery, leading to a lower risk of capital outflow. Therefore, most central banks in emerging economies are likely to consider and undertake unconventional monetary policy tools in the future. However, there are certain risks that should be taken into account. This includes the risk of increasing inequality due to increase in quantitative easing. That's a controversial take. I wanted to see what you think about that. And simply due to the fact that inflation caused by the easing of monetary policy is a regressive tax, disproportionately affecting lower income households. What are your thoughts on this opinion by Annie?
So I disagree when she says that interest rates are going to remain low for a couple of reasons. First of all, so the massive US fiscal stimulus exports inflation to countries across the world. And so there's price pressure in developing economies. But also because as the Fed raises interest rates, the the emerging economies have to raise rates just to keep it in balance, the exchange rates. So I think it's more likely than not that they're going to raise rates rather than just keep them low.
That is sensible. And in fact, I think that we have seen increased inflation in many emerging economies as well. I don't think that the behavior is the other way around, at least now that we're seeing the actual effects of the pandemic. So I think it's a very interesting question and interesting take. Yeah, exactly. Brazil, for example, Colombia, something I'm following a bit recently. They're experiencing some level of inflation, and central banks have acted accordingly. They've been acting in a counter-cyclical way. So I'll briefly put the poll so you can put your comments. Here you go. Fifth question is, will central banks in emerging economies move further towards unconventional monetary policy? I know this is not the full question. The full question is a bit broader, but I want to make just one of the yes/no parts, more discrete parts. Okay, so we have 1 yes, 20%, and 4 no's. I think that's all yes. I want to make one caveat about this, which is one of the most unconventional policies that I've seen recently, is the case of Turkey. I don't know if you're following international news, but apparently the president of Turkey doesn't believe in standard traditional economic theory, and he doesn't like raising interest rates. So he's been insisting that he will keep interest rates low, and the lira has depreciated as a consequence very heavily. It recovered briefly, but then it became known that the central bank was basically buying lira from the market artificially to raise the value, and then it depreciated again. At the moment, it's a bit stable, but it was a bit concerning a few weeks ago. So who knows? We might even have unconventional monetary policy for everyone's standards. I don't want to say that Turkey is the stereotypical emerging economy. Most emerging economies are actually moving in a way that is pretty similar to what the US is doing or Europe is doing. But you can have natural experiments of monetary policy and see what effects it has on the actual economy. And basically the effects have been the ones we can predict through common economic theory. Okay, so we're gonna go to the last question, which is one that I'm actually quite curious to know about. If I at one point become a research, I think that's one of the questions I would like to tackle, which is, here we go. Do you think US, UK, or EU monetary policy during the pandemic benefited or harmed emerging economies? Consider effects on trade, exchange rates, and remittances. I don't know how you pronounce the word. Remittances. Also consider potential heterogeneous effects, i.e., did it affect all emerging economies agents equally? That means, was it beneficial for the poor? Was it beneficial for the young? Was it beneficial for like who were the benefited players and the harm players? I'm not assuming with this that it should be a win-loss situation. Everyone can be benefited and everyone can be harmed, but definitely there are groups that will be benefited more than others. So I think this question was answered by Andy, but Andy's not here, and he didn't give me explicit permission to give his article out loud. So, but if you want to read it, you'll probably be able to after publication in Medium, where we publish our articles. But I want to see if you had some thoughts on this matter. Do you think U.S. policy, monetary policy, especially the expansionary monetary policy in the U.S. At the beginning of the pandemic, Do you think it benefited or harmed emerging economies? You can focus on a specific geography if you want. I know emerging economies is a very broad umbrella term. Any thoughts? Well, if that's okay, I know it's a very unfamiliar topic, so I don't expect you to have a very solid opinion. I mean, I don't have it myself, but I do encourage you to look forward to Andy's opinion on this, because that's a very interesting topic. I went once to a talk, and I invite you to go next year, because every year they organize the LSE. I don't remember precisely the name, but every year they organize a LSE yearly talk in which they invite a famous professor in economics. And this year they invited Helen Ray, and Helen Ray analyzed the effect of monetary policy, U.S. monetary policy, and the effect it has on emerging economies and Europe and the UK. And it found that basically sometimes monetary policy could increase the volatility of exchange rates dramatically in many countries, which is in some way harmful. So it's interesting to think that monetary policy is not just a local effect, but it can also have a lot of effect on other economies. So I think that's the last question. Let me put the last poll. Now, if you want this one, that's my to go with the spirit of Jason. In this final, you can put your final thoughts on each question fully to see if there are any changes to our previous results. So I'll launch the poll. Remember, each question you can put what you think. Let's see. Okay, one more missing. Okay, let me release the results. Okay, so in the first one, I was surprised to see a bit more optimism. One person switched from slightly pessimistic to slightly optimistic, which is a good approach, I would say. Second, there was do you expect to see changes in the macro trends? I saw someone drop from surely to possibly, which is an interesting thing. It's a more cautious response. In the third one, will central banks move forward further towards unconventional monetary policy? I think that stayed the same way I expected it. I mean, it stood the same as when I first presented the question. 4, how hopeful are you regarding the future state of monetary policy? Everyone stood in slightly optimistic, which is interesting. The first total consensus. Will central banks in emerging economies move further towards unconventional monetary policy? So it flipped to no. I think it was like this. Last time I check, I don't remember correctly. And in the last one, which is the one that is completely new, do you think US-UK monetary policy during the pandemic benefited or harmed emerging economies? The main response was a benefit in 80%, which is an interesting point. I think there are many arguments that you can put side by side. I want to see what Andy has to say about this, but it's a really good question. So I think this brings the debate to an end. Thank you so much for your opinion pieces. I really appreciated the quality of the discussions. You'll soon hear from me for the fourth part, for the fourth the fourth and final part of our research program, which is going to be a short literature review of 1 or 2 articles of your preference, which will be the first opportunity to actually face academic research. And I will try to go a bit on the methodology that the authors use. So it'll be your first experience with a bit of macroeconometrics and a bit of formal academic research on these matters. But you'll hear my brief on this soon. And I think that's all for today. So thank you so much and have a good rest of the week. Let me end the presentation. Stop recording.